All right, today we're going to unpack a story about a truly massive amount of money, a policy that's, let's just say, controversial, and a brand new name for it that has a lot of people scratching their heads. So let's just dive right in. Okay, let's just start with a number. $40 billion. I mean, that's just a staggering figure on its own, right? But the real kicker here, it's not just the amount, it's the frequency. Yeah, you heard that right. $40 billion per month. Just poof, created out of thin air. Every single month. And that really brings us to the central mystery we're looking at today. So back on December 12th, the Federal Reserve kicked off this massive monthly cash injection. But here's the thing. They're not calling it what you probably think they're calling it. So what is the official story? Let's take a look. Okay, so the official term that the Fed has rolled out is reserve management. I know, it sounds super technical, right? Kind of designed to make your eyes glaze over. But is it really that simple? Let's dig in and see what they claim it means. So, reserve management. The official line is that it's just a technical process. Think of it like routine plumbing for the financial system. They say it's just about making sure commercial banks have enough cash, reserves, to keep everything running smoothly. It's the money banks have to keep on hand by law. So the story we're getting is, this is boring. It's routine maintenance. Nothing to see here, people. Just move along. But you have to wonder, is that really the whole story? And this is where we really gotta pop the hood and ask the big question. Is this new policy just a new name for something we've seen before? Something, a lot more controversial? I'm sure you remember the term quantitative easing, or QE, right? That was the name for those gigantic money printing programs after the 2008 financial crisis. Basically, the Fed just created trillions in new money to buy up assets and flood the economy with cash. So let's put these two policies side by side and see what we find. Okay, now this is where it gets really, really interesting. Look at this breakdown. Under reserve management, what happens? The Fed creates new money. Under QE, same thing. The Fed creates new money. Okay, next. Under both, what do they do with that money? They buy government bonds from banks. Check and check. And what's the end result for both? It increases the cash reserves in the banking system. I mean, the mechanics look absolutely identical. So you know the old saying, right? If it walks like a duck and quacks like a duck, why on earth are they calling it something else? I mean, if the process is exactly the same as QE, why the big rebrand? And that brings us to the final and, honestly, the most crucial part of this whole puzzle. Because this is where it all seems to fall apart. This new policy, it seems to completely contradict the Fed's #1 most talked about mission, fighting inflation. I mean, for the last couple of years, what's the one thing we've heard from the Fed over and over and over again? We are committed to fighting inflation. We will bring it down to our 2% target. They've told us it's their #1 priority. But is it? And this right here lays out the contradiction so clearly. On one side, you have the stated goal, target 2% inflation, fight inflation. But then you look at the other side, at the current actions, printing $40 billion a month and talking about cutting interest rates. These are things that are textbook known to cause more inflation, not fight it. Which leads us to the real head-scratcher here. How can the Fed possibly be committed to 2% inflation while at the same time they're cutting rates and printing billions of dollars? To borrow a phrase from the source material, the math just isn't mathing. So it leaves us with this final big question. Is the Fed really just managing reserves? Or are they actually trying to manage our perception? Could this whole reserve management thing just be a clever way to keep doing large-scale money printing without having to use the politically toxic name quantitative easing? That, I think, is the real question to chew on.